She immigrated from China when she was 10. And then when she got into the working world, she was controlling billions of dollars on Wall Street, but she left all of that for real estate. Why does Linying Zou think that real estate is the key to freedom? We're going to find out right now on the Fearless Investor Podcast. Hey everyone, welcome into the Fearless Investor Podcast. You're joining me, Kyle Stanley, and I'm excited to have Linying Zou on our podcast today. She's one of the partners of Acris Capital, and she's just got an incredible story, immigrating from China and figuring out what life was like in the US versus what it was like in China, but also trying to convince her family that real estate was actually better for freedom than being on Wall Street and controlling over $9 billion in the market. That's what's crazy to me, is that this girl was a phenomenal trader on Wall Street and left it all because she saw that real estate was the key to freedom. So I'm excited for you to hear that story today. I'm also excited for you to go over to our website, fearlesskyle.com, and jump on the Airbnb profit calculator. If you have not done that, we actually talk about Airbnb a little bit with Linying today and how that's helped her with some freedom as well. But I just think it's such a great opportunity for you to know, are you going to be able to make money in your backyard or in a certain market with an Airbnb deal? All you have to do is download that profit calculator, type in the numbers, and you'll see exactly what you can potentially make with a deal that with really any address. So just go do it. fearlesskyle.com, right there on the homepage, fill out the information and you'll get the profit calculator emailed right to you. All right, let's get to it with Linying Zou here on the Fearless Investor Podcast. All right, guys. Hey, we got a really special guest today, Linying Zou, coming in from Boston, Massachusetts. She actually immigrated from China when she was 10 years old. You wouldn't know it. You're not going to hear an accent at all, unless there might be a couple words she told me that she has an accent on. But hey, I'm really excited to have you on the show today, Linying. I think there's so much really background that you have that is going to cast a lot of vision for people, especially from a multifamily real estate standpoint. But there's so much that we're going to talk about today. I can already feel it, but thanks for being on the show.
Oh, thank you for having me here.
All right. Awesome. Well, hey, first things first, what's your most interesting real estate investing story?
Since you said to keep it short, I think the most interesting one is probably the first property that we bought with my company. It's actually a 5-unit, but it's like a single family house in a fourplex on 2 parcels of land. But then the lesson learned here is that you do not want to buy houses from 1900s that has a shared sewer system, which you have to create easements for. So that was an interesting experience that we didn't realize that the entire water and sewer are attached by this, in these 2 units, which are on separate parcels, but the city apparently forgot to separate them back in the 50s. So that was a hidden cost that we didn't realize when we were going in.
Do you know how much that cost you?
I don't remember, but it worked out. It worked out well. We're exiting the property now, so it's working out.
Nice. Well, yeah. So, let's just jump right into your story. You've got a really awesome one. Bring us back to, when you were 9 years old and getting ready to move back or move over to the U.S. Give us your story for life in China, life in the U.S., the adjustments and everything that's led you to where you're at today. I'd love to hear that.
Yeah. I really came over here for education, right? My dad had actually come here a few years before I did. And I was fairly young, and I was 10 years old. I was, in 3rd grade in China, and I came here and went to 5th grade in the US. But really the goal is for my parents is to provide better education for me. So the goal, as they were raising me, has always been, go to good school, get good grades, go to good school, get a good job. And I did that, right? I went through that whole process where, I went to BC, I graduated finance and accounting degree, spent about 10 years in finance as a trader, and then just did a complete 180 and decided to leave my career and do real estate investing full time. So my parents still think I'm crazy and that I'm a slacker and don't know what I'm doing. But, you definitely have to try to convince very traditional Chinese parents why you're giving up your 6-figure job to do this full time.
That's crazy. Just give people a little bit of an idea of your portfolio too right now, because to call you unsuccessful or to call you crazy is that doesn't make a whole lot of sense to me. So break it down for us if you can.
Yeah, so our company has two different strategies. We have a
Okay.
direct acquisition strategy and a syndication strategy. So direct acquisitions is acquiring small multifamilies among the partners ourselves. So we have 22 units there that we actually just put up for disposition. And the goal is to take the gains that we have from those properties and roll it into a much bigger property that we can own like 100% ourselves and generate passive income from.
That's good.
And then the syndication strategy, we work with, the last two deals, we work with other partners that are more experienced, where we acquire larger apartment buildings and
Mhm.
complexes. So we have, equity in about 425 units there.
Yeah, that's no slouch right there. And that is something that you're a partner in with Acris Capital. Talk about that partnership there. How did you get associated with them?
No, so I started Actors Capital
Nice.
with two of my partners. So there's three of us, and we have individuals as well. So we have one partner very involved in marketing and capital raising. I'm involved in acquisition, so I bring the deal flow, and then we have a third partner doing asset management.
Okay, awesome. Well, let's go back to when you were a kid. I mean, moving to the US, what did you see was different in the US versus what you were experiencing as a young kid in China?
I mean, everything was different. I think just going back to even technology, right? Like there were a lot of things that in China that I never had at the time, like a walker. What's it? Walkman. There you go. I
Yeah.
never even had a Walkman back then. I don't even know, like a lot of young kids nowadays, like what's a Walkman? Um, but just in terms of like the education system is very different. It's back in China it's all about groupthink, and then in the US they want you to kind of more shine as an individual.
Hmm.
And then there's always a shift away from pure academics to like more extracurricular. So that was very different too. But it took me quite a few years to get accustomed to the new culture, right? Because there's a language barrier. So I didn't speak any English once here. So I went to like an ESL class for like 2 years, and then finally got to a point where I can communicate with other students. And so that was a big change as well. But the good thing is that I was young,
Hmm.
because I was a little kid, so the being able to adapt was a lot easier as well.
Yeah, absolutely. Well, right out of college, you got into stocks and trading, and you were on Wall Street. I mean, you were doing billions of dollars, as I have found out. So, like leaving that to go into real estate, that's a real big decision. So, talk about that decision. What have you seen has been really the difference for you of why you were so ready to get into real estate, even though you were a successful trader?
Yeah, I think it really has to come down to what I want from life,
Mm.
right? That in the last 3 years or so, I really saw when I was in my last company as a trader. We had like 9 billion asset under management, and then I was doing millions of trades a day. I mean, the job itself was fine. It was challenging. It was a lot of communication. It was a lot of talking to other traders on Wall Street, and that was fun. And I loved it. Having those trade ideas and pitching them. So it was great. I think it was just the culture, right? It's kind of the lack of like greater purpose other than making money for the sake of making money. That I really crave more freedom and flexibility in my life that the job didn't afford me. And there was limited amount of vacations, and there's limited time for me to actually go spend the money that I'm making at this job. And then the culture itself, I just had no control over, because I'm not in the management position, and there are all these more strategic decisions being made at the time that I didn't agree with, but I had no say. So that really all contributed to why I started Actors Capital, because at the end of the day, right, it's my company. I'm building something for myself, and I have the ability to control the direction where the company is going, and as well as the culture which I want it to be.
That's awesome. So, what was it about real estate though that gave you that sense of, hey, I can get some freedom here? And it sounds like freedom for you is not just financially, but just the things that you were saying there. You wanted to be able to have freedom of choice of how you wanted to run your own business. What was it about real estate that made you feel like that was going to be the right decision?
I think the most important thing about real estate is the cash flow aspect.
Mm.
So for me, I bought my first rental property in 2010. So I was, I think, 24, and I've held that rental property through time. I saw the appreciation that is experienced, the rent growth experienced through time. And then, when I left my job, I was traveling on the road for 6 months. And that rental income was enough to provide for my life on the road.
That's awesome.
So, and then taking that aspect of like real estate as an investment vehicle and my background in finance, it just meshed so well together, because I can use my analytical background, doing analysis and trading and negotiating, and apply that to real estate, and then basically take that and institutionalize it so that it the real estate aspect becomes much greater.
So you just mentioned something there. You said, was it one property that allowed you to travel for 6 months and paid for your travel expenses? Just one property?
Yeah, it was a 3-family though. So,
okay. So it was a triplex?
Yes.
Gotcha. What was the cash flow like on that?
So the cash flow was sufficient to pay for the mortgage on itself, on the property itself,
Okay.
and the mortgage on my condo, and then provide me with like $1,000 of like income a month from that.
Wow.
And obviously I have other income as well, from just like stocks and bonds and stuff. But yeah, that was like the primary things. I didn't have to worry about just the fixed expense that I have on my assets. And then traveling on the road in Asia was so much cheaper too than actually living in the US as well.
I'm sure. One property allowing you to be able to not worry about some major expenses in your life, including traveling. How powerful was that there probably was times I would imagine you're just on the road. Like, is this real? Like, pinch me. Can I actually really keep doing this just with one property? Like that, to me, anyone can be this close to a triplex, this close to their first property. And so that's pretty powerful.
Yeah, I think, for that property, right, it was unusual because I did buy in 2010, and that was the depth of the last recessionary period, right? So the price which I bought it at meant that I had a lot of equity in the property by this time. So the debt that I have on it wasn't that great. That's why the mortgage is low enough that I was able to essentially travel with the extra income. Like right now, like if I'm thinking about that property, and given that I'm not traveling full time, I actually would want to cash out refi that property, take the equity in it, and then buy another building that cash flows, So that would be my personal goal to do. But it all fits in the greater framework of creating passive income and getting that financial freedom. So
that's awesome. So, if someone's listening right now and they're thinking to themselves, like, how do I get even just my first property? You've got 400 and something properties or units. How do I even just go about getting my first? I would love to know how you got your first one. Was it, 2010, obviously, like you said, 2010, you're buying properties a lot less than what you are today. But should someone be looking to buy right now, or should they be waiting for another 2008, 2009, 2010 to happen?
Yeah, I think if you want to get started in real estate, you never wait. You cannot time the market. That's the thing, right? If you think that at some point the market's going to have a downturn, it could be 5 years, could be 10 years, and then you never get started. So I bought my first rental property really as a house hacking strategy, right? I was living in one unit and then renting out the other two, which provided, and then the rent, I have roommates. So the rent really supported the mortgage at the time. And I think that's a really great strategy for anyone, really. If you find like a multifamily in location that you want to live in, and you have the ability to house hack, definitely house hack. I always discourage, my friends and anyone that asks me for real estate advice around actually buying like a single family or a condo, unless they plan to Airbnb out the extra rooms, because you always want that income, right? You want to make sure that the money that you need from active income is also creating passive income at the same time. So it's really, it's not the best idea to take that and buy a bigger house or a bigger condo that you live in, because at the end of the day, it's going to pay out mortgage every month. And then you're going to be working your full-time job to even make more income to support your other expenses.
Yep, absolutely. Well, and I'm so spoiled because I've been doing Airbnb for so long that even the house that I live in right now, we turned a workshop into a studio, and then I'm not even living in the main house because I mean I'm single, I'm a bachelor. I don't need the big 3-bedroom house. I'm in the 1 bedroom, 1 bath, 2-story mother-in-law unit, and we Airbnb the 3-1. And so I'm cash flowing at the place that I live at. So I think everyone should be doing that in some manner, especially if you don't have kids and everything too. That's where it starts to get a little bit
Yeah,
more
I,
difficult.
I, I do that too. Actually, I do that. I Airbnb out my condo when
Nice.
I'm traveling, so
There
I
you
do
go.
get extra income from that as well.
Yeah, it's a beautiful thing. It's awesome. Um, okay, well, so Linying, talk to me for a second about what is the next step if someone you keep mentioning you're hinting at a little bit. The strategy sounds like you get a property, cash flow for a little bit, maybe you sell it, maybe you refi, and then you go and buy something bigger. Is that the main strategy that you think people should implement if they're going to get into real estate?
I think people get into real estate several different ways. I mean, if you don't have a lot of principal, a lot of equity, I see a lot of people do wholesaling or fix and flips. There are people who do, small multifamilies, obviously, but for our other strategy, which is syndication strategy, is completely passive. So it's really catered to investors who want the passive income but don't want the headaches of being a landlord. So, for a large deal, for example, like a 300 unit in Arizona, let's say, we bring individual investors and, they contribute this minimum like $50,000 investment. And then all they do is they get the monthly distributions or quarterly distributions based on the project itself. And then in 5 years or 7 years time, we either refi the property or we sell the property, and then they get the capital gains from that. So that's like a complete passive strategy. It's actually a really great way for investors to learn about real estate, to learn about multifamily without actually having to deal with tenants and having to deal with like leasing or toilet problems or things like that. Because we do that, so they don't
Yep.
have to.
Absolutely. So a lot of my audience is pretty well versed in this because I've been very outspoken about my experience in Cardone Capital and things like that. How would this differ from something like that?
So I don't know what Cardone Capital does, so I
Okay.
can't really compare, but I can say that, what we really value for our company is the educational aspect that we provide to our investors. So we want to make sure that every investors that come into our deals understand what they're investing in. So we start the education process very early on. We have a lot of content on our website. We have monthly newsletters that goes out, as well as the white papers we've written on the subject. That way, our investors kind of know when they come in that what this product is and what this investment opportunity is and what are the risks that they may see in a project like this. So that's like a key cornerstone of our company. The other thing is really the due diligence and the underwriting that we do on our deals. Because of my background, Christina's background, we're so we spent so many years in finance that our analytical backgrounds really allow us to kind of tear apart deals and really do in-depth analysis on the numbers. So just from the due diligence side, I think we are a lot more conservative and a lot more diligent for that.
That's good. Well, and I want people to understand too right now, a lot of people jump on this podcast and they want to learn the exit strategies. They want to learn how to do it themselves. But at the end of the day, if you're going to get into multifamily real estate, to just jump right into that without any experience is very difficult. A lot of the underwriters, a lot of the loan officers are not going to loan to someone that doesn't have any sort of management experience. And so guys, this is a really great opportunity that if you want maybe to sacrifice a little bit of a return, but also know that, hey, I don't have to be the expert. I don't have to put in the time. I don't have to be the one that's managing this. And instead of being, say, 100% owner in a $300,000 property, I'm going to be, a little bit of an owner and only have to front $50,000 instead of 300,000, but I get to be a part of a deal. That's a pretty awesome opportunity to jump into real estate and to actually say like, hey, I'm a part of a apartment complex in Arizona that is owned by a lot of other people as well. Like that's a really awesome thing to be able to kind of brag about. And so, but I want to know too, Linying, I bring that up because I want to have people understand what are other maybe benefits or things to be aware of why you would want to go this syndication route rather than trying to go do it on your own.
The syndication route. So there's also other benefits from it. There's I don't know if your listeners have heard of the cost segregation, but it's essentially a salary depreciation. So there's a tax benefit too in a syndication deal. You can also use like your self-directed RRA for a deal like this, which you may not be able to use to purchase a triplex or a duplex. Because there's the whole leverage aspect. And so there's like various ways that you can come into a syndication deal that you might not be able to see in an individual deal. And it's kind of awesome too. If you're driving by a 300 unit in Arizona, you're there for vacation, you're like, hey, I own this property. You might own a small bit of the property, but you own it. But a lot of these properties looks pretty cool, right? Like they look, very modern, and they have pools, they have other amenities. So it's actually like a pride to be able to like drive by it and say, hey, I actually own a part of this property.
That's really cool. That's awesome. Well, hey, last question before we get people to get directed to you. You told me before we jumped on here how much you love to travel. You mentioned how that first deal really helped you to travel. What is the power of real estate, do you think, for most people that can really help them to either travel or to live that lifestyle that they really want to? And maybe sharing what it's done for you, how much traveling or how much freedom you've had in your life just since getting into real estate. Is there any sort of knowledge or stories that you can share with us for that?
Yeah, absolutely. I think, the one great thing about real estate is the passive income. And really what passive income generates is freedom. And it could be the freedom to spend more time with your family. It could be the freedom to quit your job, right? It could be freedom to travel if you're if you like traveling. I know some people are couch potatoes, they don't like traveling, but for me personally, right, having started Acres Capital, I just have a lot more flexibility in my time. We do most of our projects, actually all of our projects are long distance. So, we have system and process in place to, in terms of property manager and on the ground team that help us manage these assets, that we don't have to be there in person. So, if I am in, Spain for 2 weeks, for example, that's fine. If my business partners are in India for 2 weeks, that's fine too. So that gives us a lot of like freedom to be romantic if we choose to. And I think that's really the value, is that, once you invest and you build that nest egg and you build that cash flow, you'll get to a point where you're not relying on your W-2 job. You're not relying on being, showing up at the office every day. That way you have that choice, you have that option to be able to do what you want to do in life. What are your passion projects? What are your hobbies? How do you want to spend your time, essentially?
I love it. It's awesome. Well, Linying, thank you so much for sharing with us today. Where can people go to connect with you?
You can go on our website, www.acrescapital.com. You can email me directly at lzou, LZOU, @acrescapital.com. But yeah, definitely feel free. We have a monthly newsletter, as we said, and we also put out, white papers and other educational content. So definitely feel free to visit us on our website.
Awesome. And can you spell Acres for us?
AKRAS capital.com.
Perfect. Okay. Thank you so much, Linying. Any last words for our audience?
Real estate is great. Get into it.
I love it. I love it. Thank you so much for joining us here on the Fearless Investor Podcast and for helping our audience to conquer the world of investing. Thanks so much. All right, guys, let's do the show notes here for fearlesskyle.com/Acres, and that's AKRAS. Again, Acres, AKRAS. And all you got to do is go over there, check that out. It's got her website, the ways to be able to get connected with her. And if syndication sounds like the deal for you, I know we've had a few different syndicators on the show. So as you're seeing, there's just a lot of different opportunities for you to jump into real estate, either passively or actively. If you've got the time, you've got the desire, you've got the drive to do this whole thing, then maybe the active side is better. But if you're a high net worth individual that maybe doesn't want to learn a new skill and wants to really just get into how can I get the best return for my money, these syndication opportunities are really good because you're not just getting a return on your investment, you're also getting equity and capital that gets to be returned to you when they refinance or sell, which I think is a really special thing. So go check it out again, fearlesskyle.com/Acres, AKRAS. That's it for the Fearless Investor podcast today. Thanks for joining us and conquering the world of investing. We'll see you next time.